Welcome back to the South Florida Mortgage Report with your hat dude wearing mortgage guy, Billy May, always joined with Capital Partners Mortgage President Craig A. Garcia. Craig, how we doing today?
Doing excellent, sir.
All right, we got some really interesting information we're going to talk about. I mean, as always, we'll talk about mortgage rates and so forth, but today we're going to talk about this credit scoring thing, right, Craig?
Yeah, there's a new I was gonna say there's a new sheriff in town. I don't know if that's quite the way to put it, but there's a new player in the game. Vantage score.
Yes. And I know our realtor referral partners, I'm sure you've heard about it because I've had realtors ask me about, hey, what's this Vantage score thing? What's it going to mean for, for my clients and for borrowers and everything like that? And kind of, so what's going on there, Craig? Basically, if you have been following this, it's in the news. We're going to see those going to be some good repercussions, so to speak, from a lending perspective. So let's kind of dig deep, doing a deep dive into this afternoon, right, Craig?
Yeah, so VantageScore 4.0. So it's funny, a lot of now this is a competitor to FICO. And so when you get a mortgage, then there's credit bureaus, right? Equifax, Experian, TransUnion are the credit bureaus, and they actually house all of your payment history. But then when a lender wants to make a credit decision, they pull that data and gets run through a scoring model. FICO is really kind of had a monopoly when it comes to credit scoring, and different industries um, kind of subscribe to certain scoring models.
Right.
So the mortgage industry has their own scoring model. The auto lending industry has a scoring model, and so but everybody would get scored based off of FICO in the mortgage business. And so and based on the fact that nobody else really did it, FICO could charge whatever they wanted, and in recent years had been charging more and more and more.
Oh yeah, I
So
mean, listen, you and I set these estimates of people, and we have to quote, 150, $200, whatever, even more for joint credit report. Sometimes $300. People ask me, $300 for a credit report. I'm like, well, the credit bureaus are charging us more. We can't pad anything. We got to charge you what they charge us.
I was going to say, if the inflation has hit anything as hard as I don't know, my haircut has gotten that you wouldn't know,
Yeah.
but
Oh yeah. Yes.
going to the barber in the last since COVID has really exploded in price.
True.
Lots of other things have exploded in price, but credit reports definitely have exploded in price.
Yes.
So now, um, as part of the affordability push, they said, "Hey, we want to help more borrowers get approved," and we'll talk about that. But also from a pricing standpoint, that might be the one interesting thing. So this new score is called VantageScore 4.0, and so instead of getting scoring just from FICO, now lenders can get scoring from VantageScore 4.0. Now
Right.
it's brand new adoption. It was kind of approved last summer, and now a handful of lenders are offering it. It's not in widespread use yet. It will be. They usually, when something this big and this widespread that affects so many different things, has to kind of be rolled out in phases. And so
Right.
it's not something that everybody can take advantage of. So frankly, we don't know how much it's really going to help. There is some interesting things that they hope it's going to be helpful to some more borrowers. And I don't foresee that that's going to be um, I don't think it's gonna change the lending landscape in terms of who can get approved. Now, a lot of people that just couldn't get approved at all are now suddenly gonna find it easy to get approved. I don't think it's gonna be that type of an impact. But the idea that now FICO can't just charge whatever they want anymore because they've got a competitor, that's already started to show signs that that's gonna be helpful for the cost of credit.
Yes.
So that's helpful. That just in that right there, that's only helpful. So
Yeah,
that's very
absolutely. I mean, and you said it does take time, and it was last summer where Bill Pulte, he's the head of the Federal Housing Authority, et cetera, and then the secretary of HUD, they came together and they said, "Hey, we're going to do this. It takes time to launch, et cetera, et cetera." But the presidential administration for the past 16 months has been keep saying, "Hey, we want to do more for housing," and so it's kind of you can't hit a home run and do things, but you got to do a lot of little things to help the housing market. And this is something else that can help the housing market that we're hoping. And it did make some news, but we want to address it and kind of talk about what the advantage is of the
yeah.
interest. So.
So now here are some of the things that they're saying that this can do that's helpful. What the Vantage 4.0 score can do differently than maybe what FICO does. So it uses trended data, so payment behavior over time, not just a snapshot. It incorporates alternative data, so rent, utility, telecom payments. You can kind of do that today with FICO, so maybe it just handles that a little differently. It can generate a score with as little as 1 month of credit history. Now, that's pretty different because usually you need some more than that with FICO. They're saying it's going to score an estimated 33 million more Americans than classic FICO, including first-time buyers, immigrants, and people who have a thin credit file.
That's a
So
big part of it,
that's a
I
big
think,
number
right there. I think what they're trying to do is they're trying to get more people buying homes. And there's the perception out there that maybe, hey, they don't have a lot of established credit, and this is gonna open up, homes to a lot more buyers. I think that's what they're looking at, right?
for sure, for sure. And this is the Vantage score is claiming 20% more originations without additional risk. About 5 million Americans, expected to gain new mortgage access. That going to work out that way? I hope it does. I would say it's interesting because there are definitely embedded into our system right now and into the scoring models with with DU and with LPA, which is basically the computer engines that are used by Fannie Mae and Freddie Mac. As long as you can get an approval, then we have investors that don't care how thin the credit profile is. Now, with this brand new scoring that you could have a month of credit and get a score, is that going to are they gonna need to make some changes to how they look at that credit score versus the FICO score, and how's that gonna play out? I don't know. I'll be interested to see.
Yeah.
But I certainly don't think it's gonna hurt anything. And so listen, will they achieve as much additional credit out there based on the claims? Boy, I really hope
Yeah.
that's the case. And we'll find out.
I hope so too. I mean,
Yep.
anything can help, to open up to more buyers, that's a good thing for us, no doubt about that.
Yep.
Yeah.
So yeah, so I as and I would imagine like so right now today we don't have access to that. Well, none of our investors have really rolled that out quite yet. But I would imagine that that's going to be coming soon to more lenders and as we start seeing the opportunity to look at that, we'll certainly be able to comment about it and
Yeah, I think you'd
hopefully share some stories.
yeah, I think you'd mentioned offline that one of the big wholesale lenders is starting to institute it, and, so I think once they start instituting it, then you're gonna see more of, lenders like us and other lenders that'll probably start bringing on from what I gather.
Yeah, yeah. So it's good news. It's definitely good news anytime somebody that's got a monopoly and has been increasing the what they've been charging for years. Has to now have a competitor.
Yes.
Good for
Oh,
everybody.
absolutely, and like you said, I remember, 2 or 3 years, maybe 3 or 4 years ago, credit reports, it was $75, maybe $100, and now, like, get these closing statements, and when we have to do updates to the credit report, $300. It's ridiculous.
It adds up quick,
Yeah.
unfortunately.
I mean, it does it's not as much as, your haircut that's gone up that much. I mean, but still, I mean, that's crazy, so, alright, so that's interesting. So, what else can we expand on as far as the Vantage score, that we wanna tell our borrowers? Anything else we wanna highlight?
Yeah, no, I think that's it's here. It's not here for everybody today, but it's coming. And I think and already there's some of the cost stuff is happening. So
Okay, good stuff. Should we segue into mortgage rates?
sure.
Yeah, so mortgage rates. So the Freddie Mac survey came out, and after what 3 weeks of kind of slight kind of decreases, we had rates went up, and the average I think is what they say 6.3 up from like 6.23 last week. Uh, Slightly up. The bond market's been kind of chaotic a little bit lately, and then this has been happening because the Federal Reserve, he had his last press conference and his last meeting, so that's going to have could have a big impact. We'll see. But as we always know, mortgage rates aren't really directly impacted what the Fed says. More of the bonds market, and the bond market's been kind of a little edgy around that 4.3 market. Is around lately. It seems like so.
Yeah. So yeah, Jay Powell with his last public address as Fed chair, and that he is planning on not leaving.
Yeah.
just like we
It's like the Wolf of Wall Street. He's
the
not
Wolf of Wall
leaving.
Street clip. I
Right,
ain't
right.
leaving.
Right, right.
So yeah.
Well, he's gonna be
So
a governor now, I guess, right? He's not the chairman,
yeah,
he's gonna be a
yeah,
governor.
yeah, yeah. He won't be the chairman anymore, but he'll still be around. And I think it's good news for the market. I think it's good news for the bond market that the investigation into him has been dropped.
Yeah,
I think the market liked that because that's the independent Fed is definitely is considered a very important thing, and
yeah,
so I think that that was good news. The market liked that got put behind us. So now it's Kevin Warsh's time,
yeah.
and
That's
I've
true,
heard. And
yeah,
it's funny.
right.
I see some talking heads talking about this is the most hawkish Fed governor that's being appointed. I've heard other people say that they think that they're going to start cutting rates. So it's
Yeah,
interesting. And then you've got this since he got. I think I think there was certainly a group that would say wouldn't have gotten the job if he wasn't going to cut rates, which is what Trump's been asking for.
sure.
But it's definitely a different environment now. We're in the middle of this conflict, and
Right.
oil prices are high, and it's not resolved. And so it will be very interesting to see what transpires.
Yeah, the oil prices, I mean, they were up over $100 a barrel. I think they're still kinda hovering right around that right now. That hasn't been good for mortgage rates. And the conflict, like you said, it keeps continuing, kinda drags on, and I'm sure they wanna get some sort of resolution there. That's not been good for mortgage rates either. I mean, we're still relative to where we were a year ago, we're still better than we were a year ago. Maybe that's part of the reason why our mortgage applications have been better. And we do see houses selling, and I worked at an open house last weekend. There was a open house here in Coral Springs where I am, $800,000 plus house, and we had, I think, 25 families come through in a matter of 2 hours, and that realtor got a full price cash offer, actually. So, there is activity out there, and there are people buying homes, but I do see other homes that are out there, like, especially in the condo market that are, kinda sitting on the market longer than they should have, so, or they should be, so it's kinda interesting. If homes are priced well, people are buying. There are home buyers out there, some confidence, but it would be better if we saw those rates go down even lower.
25 families through an open house is a pretty that's an eye-popping number, I think. So that's exciting.
Yes. Yes, it was a great home, 2,600 square foot, 343, the pool, Coral Springs, desirable neighborhood. There's a lot of pluses there. I never really see that many families in one open house. Usually maybe, I don't know, 5 or
That's a big
6.
number.
It's
That's a
big.
very successful open house. I mean, if you're a
Yeah.
seller, that's very now it ended. We already know you already told us it ended with a cash offer. So
Right.
obviously that's a very happy seller as a result of that open house.
Yeah.
But even if it hadn't brought that, I mean, if you have that kind of traffic through your open house,
Yeah.
you're pretty excited about the prospects of moving the property. So
Yeah. So that there are people buying houses out there. And if we just think what happened if rates got below 6%, I think we'd even see more stuff. And maybe some of those condos would be sold that are kind of sitting on the market for a little while too.
yeah, no, I think it is encouraging with everything that's happened in the since the February. I mean, February we have the start of this war. Uh, you know, oil prices go crazy. Um, Rates went up.
Yeah.
We still were very active with applications. March was a great application month for us. I think it got a little slower here in the last couple weeks. Rates have still also been, even though they're a little higher certainly than they were before the conflict began, they've still been pretty resilient.
Yeah.
So the stock market's been incredibly resilient. So it's pretty
Yeah.
interesting how resilient everything has been. And so that's a good.
Yeah, and the forecast means with the forecast still saying that, hey, we could be down in the lower or low sixes, even high fives by the end of the year. We'll still see. That's what Freddie Mac, Fannie Mae say. We'll still be up by the end of the year, so that'll be interesting. But there's all these other um, reports, economic reports that influence that. So if you want to go ahead and kind of talk about some of those reports that have come out recently, correct?
Okay, so yesterday we had PCE inflation. The headline, PCE was 3.5% annually, up sharply from 2.8% in February, which is above the Fed's 2% target. We've been above target, but it had been getting better. core PCE 3.2 annual up from 3%. And it's oil prices driving through to everything, which is the reason why the oil story is so important. So, Bill, yeah. So I was going to say before we wrap it up, there was a pretty interesting, neat story that happened from yesterday, actually. So we had a customer, and when I heard the whole story, I started to come across my radar because I found out that we had a closing where these people were signing at the table, and suddenly we were calling the closing off, and we were the ones that were calling the closing off, and it was because we were trying to help the borrower save some money. And I said, what's going on?" So it turned out that apparently this customer had been they'd been waiting for this information to come back from this creditor so that they could get this thing deleted from their credit report. And it had been taking longer than they thought. They'd been trying to, it was going to save them a significant amount of money on their PMI if they can get
Okay.
their credit score improved. And so, this was obviously something they had been working on, and we have the ability to help them get their score improved quickly as long as we get what we need from the creditor. They finally got it. We had asked for the score, and the closing date was upon us, and it hadn't come in, and they were going to closing, and they weren't going to be able to take advantage of this. And they basically had gone to the closing, they had signed, and they were on the way out when in the morning, all of a sudden, the email came over apparently where this had happened, and we said, "Hey, if we still want to do this, if you still want to take advantage of this, we actually have it now." And so it kinda came in right at the nick of time, kinda like, like the end of a
Really?
movie, and
My
we
yeah, I was gonna say
actually
this is a
everybody
great Hollywood ending here. Now, was it a purchase or refinance?
this was a purchase.
It was a purchase, so we had to go back to the
This
seller
was
and
a purchase,
extend?
so no, so there was no extension. So
Whoa,
everybody
so you
stopped
you
what they were
closed it the
doing.
same day?
We closed it the same day.
That's
So
a phenomenal story.
we took this new credit report with the better score,
Right?
and when we had this, we understanding the situation, what we were trying to do, and hey, could we possibly do it? Because last day of the month's a busy day, and so it's not always possible to stop on a dime and redo a bunch of stuff. We had the capacity. It was certainly important to these people. It was going to make a meaningful difference. It wasn't going to save them $5. And so we had to stop the closer. We had to get the underwriter involved. We had, the processing manager had to get, everybody had to be working, together, which is one of the great parts about when you work with a big team, that you can get that type of thing done. Anyway, we were able to pull it off. They still closed the same day. They got their keys, they got into their house, and come to find out, this was the third time that they had been trying to buy a home, and different things had gone wrong for them, with different parts of the process. The inspection came back bad. It's been like a 2-year odyssey for these, younger couple trying to buy a house, to the point that they hadn't even told that their family that they were buying the home because they were afraid everything was going to go badly again. And so yesterday everything went right, and then they got this little bonus at the very end, and they got in the house. And so pretty cool story. So I thought
That's an amazing
that was
story. I mean,
pretty neat.
so let me get
Yeah.
this straight. So these home buyers, they've been looking for 2 years off and on. They've had some other transactions because inspection went bad, et cetera, et cetera. They go to contract on a house probably within the past 30 to 60 days, I presume, with us, correct? We're our this I didn't do this on one of our loan officers. Hey, this is what your interest rate is. This is what your monthly PMI looks like with your current credit score. Because I've been in this seat before. However, if we can get this, this, and this on your regarding your credit report, we can rescore your credit while in process. Maybe we can get you to here. And then we were working towards this, and they had a closing date that they had to close by, and
Yes.
they're ready to close. We were clear to close in the morning of our closing date. We got the update on the credit reports, which we have no control over. We got the new
Right.
credit score. We sent it back to underwriting, redid the whole thing, redid it with the better payment for the borrower, and still closed the same day. That's an
Yes.
amazing story. I mean,
That is
these
a
are
good
the
story.
kind. I get excited, Craig. I'm sorry. I just these are the kind of things that
Yeah.
when our referral partners, this is what we do because our clients, you are our referral partners, our customers, you are our clients. This is what we do in order to provide excellent service. I mean, we want your clients to be happy, and that's an amazing story. Amazing story.
It was pretty cool. So when I heard the whole thing, I was like, "Oh, wow. That's really great." So, yeah, that was
That's
really
really
nice.
you know, because I've bugged you before. I love utilizing the tools to try to rescore clients, to try to get them, and I've done last minute stuff, maybe not to that extent before, but the fact that we're able to like put the brakes on, and close and fund the same day, not have to get an extension from the seller. That's a win-win for all. And hats off to the who's the loan officer on that, by the way. So,
Melissa Lopez.
Melissa, oh wow, hats off to her. Well, I mean, she's been around forever. She's amazing. So that's really really
Yeah.
cool. That's a great story.
Yeah, no, it was really good. So,
Very cool.
anyway, but,
All right.
that's all for this week.
Yeah, it's all this week. Sorry, I get all excited. I love hearing stories like that. So
Yeah, no,
hats
it's
off,
really good stuff.
to Melissa and to our entire team for pulling it off in the same day, still closing and funding on the last day of the month. That's spectacular. So, all
Yeah,
right,
good
sounds
stuff.
good, Craig. Well, listen, you have yourself a great afternoon, and we'll see you
At the
at the
closing
closing.
table.
Hopefully, with a better credit score too.
So,
So,
yeah.
all right, take care. We'll see you. Bye.